Now, despite the harsh operating environment in Nigeria due to the high price of diesel, foreign exchange scarcity, among other challenges, the Manufacturers Association of Nigeria recorded a marginal 0.7% increase in the second quarter of this year. According to the Manufacturers CEO's Confidence Index recently released by the Manufacturers Association of Nigeria, the MCCI index increased to 54.6 points from 53.9 points recorded in the first quarter of this year, despite the plethora of challenges signaling manufacturers' feeble hope in the economy. The association notes that the meager improvement in the index score in the second quarter of this year implies that manufacturers' confidence in the economy slightly improved above what obtained in the preceding quarter. It's also important to note that business conditions in the country under the quarter reviewed was more challenging than what obtained in the first quarter of the year, just as employment conditions worsened. But the manufacturers responded to the economic challenges that prevailed in the quarter with appropriate survival strategies and adjustments, including operations and remodeling of these production operations after the marginal slowdown experienced in the first quarter of this year. And now in this next report, the Minister of Finance, Budget and National Planning, Zainab Ahmed, says the Federal Executive Council has approved the 2023 to 2025 medium-term expenditure framework and fiscal strategy paper drafted by her ministry. Addressing journalists at the end of the Federal Executive Council meeting in Abuja, the minister explains that the federal government pegged the price of crude at $70 per barrel in 2023 and $66 per barrel in 2024 and is also pegging it at $62 in 2025. She also notes that the projected nominal GDP will rise to 225.5 trillion naira, with 95% of this contribution by the non-oil sector, while the oil sector will contribute only about 5%.
In the past 4 years, because of the volatility in the crude oil market, we have not had any accretion to the excess crude account. So what we have had has been gradually used up for different purposes, and it's always used in consultation with the National Economic Council, that is the governors, because this is a federation account.
That was the Minister of Finance speaking there. And moving on now to the aviation sector, the federal government says it has concluded plans to begin flight operations of the national carrier Nigeria Air with an initial 3 aircraft to be leased from other companies. The Minister of Aviation, Hadi Sirika, who made this known while briefing journalists at the end of the Federal Executive Council meeting in Abuja, explains that beyond the lease of the aircraft, the President also approved a total sum of 1.5 million euros, approximately 7 billion naira, to enable the airport authorities to acquire working tools under the Accident Investigation Bureau. The minister also maintains that flight operations will first begin locally, then progress to regional and international routes going forward.
As to the make and type, we will be having eventually a mix of the two. The Airbuses and the Boeings, because every airline that will grow big is either or. Most of them are either Airbus or they are Boeing, especially for the intercontinental and international flights.
Minister of Aviation Hadi Sirika speaking. The shift in focus now to the international front. Asian shares made guarded gains today as investors centered a possible slowdown in the pace of U.S. rate hikes, comforting bond markets and also sending the dollar to a 3-week low on the yen. MSCI's Products Index of Asia-Pacific shares outside Japan are up 0.7%. Japan's Nikkei added 0.3% and South Korea's Kospi also added 0.7%. Chinese blue chips firmed 0.6%, aided by reports Beijing is planning more support for a hard-hit property sector. Eurostock 50 futures also gained 0.6% as London's FTSE futures also gained about 0.2%. That saw Nasdaq futures also dip 0.4%, having enjoyed their best daily gain since April 2020 early on Wednesday, while the S&P 500 futures also eased 0.2%. And in this next report, the Federal Reserve, in its latest move, says it would not flinch in its battle against the most intense breakout of inflation in the United States since the 1980s, even if that means a sustained period of economic weakness and a slowing jobs market. As Federal Chair Jerome Powell also explained the logic behind the stiffest interest rate increases in roughly 4 decades, it was peppered with questions about whether the U.S. economy is in or on the cusp of a recession, a notion he rejected because U.S. firms continue to hire in excess of 300,000 additional workers each month. But the 75 basis point rate hike announced by the Fed earlier on Wednesday, coupled with earlier actions in the month of March, May, and June, has now jacked the central bank's overnight interest rate from near zero to a level between 2.25% and 2.5%. That is the fastest tightening of monetary policy since former Chair Paul Volcker battled double-digit inflation in the 1980s. And wrapping up business news at this hour, oil prices on the international market gained more than $1 a barrel today, extending gains from the previous session buoyed by improved risk appetite among investors, while lower crude inventories and a rebound in gasoline demand in the United States supported prices. U.S. West Texas Intermediate crude recorded a price increase of 1.32% to hit $98.54 per barrel. Brent crude now sells at $107.60 per barrel, registering an upward price margin of 0.92%. Bonnet Light's performance continues its losing streak, recording a price drop of 3.25%, selling at $118.10 per barrel, and for the OPEC basket, crude oil dealers offer $109.40 per barrel with a price surge of 2.9%.